Well friends, I welcome you all in this session on hire purchase accounts. Well friends, in the previous lecture we had studied about the basic concepts of hire purchase accounts, and we had learned that how the accounting system takes place when the accounts are recorded under the hire purchase system, and what sort of accounting treatment is done as far as the hire purchase transactions are concerned. So, in line with that today we will discuss that when total cash price and installments are given, but rate of interest is not given, then how to determine the amount of interest as far as the hire purchase accounts are concerned. So, in this we will discuss with the help of an example to make the learners understood and to make the presentation very clear that how interest amount is calculated when the interest rate is not given in the question. So, it is very simple to determine the amount of interest when the rate of interest is not given. Friends, we had discussed an example in the previous lecture. So, here we will see how the amount of interest is calculated. So, here you know that in that particular example rupees 8,000 were paid as a down payment and 3 installments of rupees 8,000 each per annum was also supposed to be paid by the hire purchaser. So, that way hire purchase price was 32,000 and the cash price was mentioned in the question that it is rupees 29,800. So, the down payment is also given, that is rupees 8,000. So, if we subtract the amount of cash price from the hire purchase price, so we can easily calculate the total amount of interest included in the hire purchase price. So, here hire purchase price was rupees 32,000 and the cash price was rupees 29,800. So, that way rupees 2,200 is the total amount of interest which is included in the hire purchase price. So, let us see that out of rupees 2,200 what will be the amount of interest which is included in each installment. So, this is a total rupees 2,200 is the total amount of interest. So, based on this now we have to ascertain the amount of interest which is included in the annual installment. So, it is very simple that in the beginning of the first year the total amount which is outstanding is rupees 24,000 because the total hire purchase price was 32,000 and out of 32,000 rupees 8,000 were paid to the hire vendor immediately as down payment. So, therefore, at the end of the first year the outstanding amount was 24,000. So, here ratio 3 because all the 3 annual installments are outstanding are pending, therefore, the ratio is 3. So, here we can easily calculate that total amount of interest is 2,200 and when ratio is 3:2:1, it means at the end of the first year there are 3 installments which is lying pending, then at the end of the second year, then at the end of the third year. So, here 2,200 multiply by 3 divided by 6. So, here the amount of interest is rupees 1100, which is included in the first installment of rupees 8000. Then at the end of the second year, the outstanding amount is 16,000, because another 8,000 rupees were also paid at the end of the second year. Therefore, the outstanding amount is 16,000. So, here again we can easily calculate the total amount of interest was 2200 multiplied by 2 divided by 6, because at the end of the second year, the ratio is 2:6. So, it is 733. So, it shows that rupees 733 is included in the second year annual installment of rupees 8000. Then we can easily calculate at the end of the third year, the outstanding amount is 8000. So, here in 8000 we can easily calculate the amount of interest which is included, that is 367, because the total amount was 2200 and the ratio is 1:6. So, if we calculate it, it comes to rupees 367. So, that way out of 2200 in the first year installment 1100 rupees were included, in the second year annual installment of 8000 rupees 733 rupees were included, and in the third year installment of rupees 8000 367 rupees as interest were included in the installment. So, this is how we can calculate the amount of interest which is included in the annual installment. It is very simple. Next one is accounting record in the books of hire purchaser when asset is recorded at full cash price. So, we will see, and again it is very simple, only the thing which matter is that we must be very focused and we must try to understand the implications of the hire purchase accounts of hire purchase transaction, how these transactions are recorded, and when some informations are given particularly about the hire purchase transaction, then how to deal with those transactions. So, it is very simple to calculate all those things. So, here following are the journal entries which are recorded in the books of the hire purchaser in case where the asset is recorded at full cash price. So, first one is when the asset is purchased on hire purchase. So, very simple, asset is coming to us, therefore, it must be debited as per the real account, asset account debit to hire vendor. And when the cash down payment is made, very simple, the cash is going out, therefore, it must be credited vendor account debit to bank. Third one is when the first installment becomes due. It is very simple, interest account debit to hire vendor when the amount of interest is due, and when the installment is paid, it is very simple, vendor account debit to bank, because as per the personal account, vendor is the person who is receiving the payment. So, any person receiving the payment must be debited and the cash is going out. So, as per the rationale of the real account, anything which is going out must be credited. Then depreciation charge. So, being an expenditure, we will apply the rationale of the nominal account. So, all expenses and losses must be debited, depreciation account debit to asset. So, here the asset is losing its value. So, therefore, asset account must be credited, otherwise we all know that all the assets have the debit balance, but in order to reduce the value of the asset, it must be credited. Then for transfer of interest and depreciation to profit and loss, because amount of interest and depreciation both are the loss or expenditure for the hire purchaser. Therefore, any balance of expenses and losses must be transferred to the profit and loss account as per the rationale of the accounting. So, the journal entry is very simple, profit and loss account debit to interest to depreciation. So, here is a question. ABC Limited bought a machine on 1st January 2016 from XYZ Limited under a hire purchase system of payment, under which 3 annual installments of rupees 2412 would be paid. There is no down payment and the cash price is rupees 6000. The rate of interest would be 10% and the depreciation rate would be 20% per annum would be charged on straight line basis. So, here the depreciation would be charged as per the straight line basis. It means the amount of depreciation will remain the same over a period of time. So, here let us see the informations which have been provided in the question. The first one is date of purchase, it is mentioned 1st January 2016, and it is also mentioned that there is no down payment. It means the no amount was paid immediately. Then the second one was date at which the installment becomes due. So, it is 31st December. Every year the installment becomes due. It means 31st December 2016, second installment 31st December 2017, and third installment 31st December 2018. So, date of closure of accounts again 31st December. Cash price, it is given 6,000. Then hire purchase price minus interest, annual installment. So, there are 3 annual installment of rupees 2,412. So, if you multiply it, it comes to rupees 7,236. So, number of installments are 3, amount is given, mode of each installments is given, that is 3 installments of rupees 2,412 each. Rate of interest 10% per annum, rate of depreciation 20% per annum, method of depreciation straight line method. So, all the relevant informations have been provided, and with the help of these informations we can easily prepare the ledger accounts in the books of the hire purchaser or in the books of the hire vendor. So, we will prepare the ledger accounts in the books of ABC Limited. It means ABC Limited is the hire purchaser. So, ledger account in the books of hire purchaser. So, first it is machinery account, and then the other accounts are there. So, here the machine has been bought against rupees 6,000. So, we had made an entry machine account debit to hire vendor. So, hire vendor is XYZ Limited. So, it is 6,000 rupees. Then we charge the depreciation. So, we will charge the depreciation at the rate of 20%. So, 20% of 6,000, it is 1,200. So, by balance CD at the end of the year 4,800. So, total it is 6,000, 6,000. Then we will brought down this balance 4,800. Again we will charge the depreciation 1,200, because the depreciation amount will remain the same, because the method of charging depreciation is straight line basis. So, by balance CD 3,600. So, again it will be brought down next year, 2 balance brought down 3,600. So, by depreciation 1,200. So, by balance CD 2,400. So, this is how the asset account is prepared in the books of the hire purchaser. Next one is XYZ Limited account. It means hire vendor account. So, generally hire purchaser will prepare 2 accounts in his books. First one is asset account and the second one is hire vendor account. So, in the books of hire purchaser, hire vendor accounts. So, when we will make the first payment at the end of the first year, we will make the entry hire vendor account debit to bank. So, it is to bank at the end of the first year 2,412, and then we bought the machinery. So, the entry was machine account debit to hire vendor. So, we had credited the hire vendor account. So, buy machinery 6,000, and here at the end of the year interest is also to be credited in the accounts of hire vendor. So, we made the entry interest account debit to hire vendor. So, buy interest 600. So, total it is 6,600, and here at the end of the first year 2 balance carried down. This is the difference between the credit side and debit side 4188. So, total is 6,600. Now, in the beginning of the next year we will brought down this balance, by balance brought down 4,800. So, again by interest 418 rupees, total is 4,606. Here again at the end of the second year we will make the payment of the second installment to bank 2,412. So, at the end of the second year this is the balance of 2,194. So, total is 4,606. So, again at the beginning of the third year we will brought down this balance 2194, by balance brought down 2194, and again by interest at the end of the third year 218. So, the total is 2412, and here at the end of the third year we will make the payment of the third installment, and the amount of installment is 2412. So, here the account is automatically closed by having the equal amount in the debit side and equal amount in the credit side. So, here the amount of interest is calculated. So, cash price was 6000, add interest on first installment. So, interest on first installment 6000 at the rate of 10%, it is 600. So, total amount will be 6600 less first installment, it was 2412. So, amount outstanding at the time of second installment would be 4188. Now, we will calculate the amount of interest on this amount at the end of the second year. 10% of 4188. So, amount comes to 418. So, it is total is 4606. So, less second installment, again it is 2412. So, the outstanding amount at the end of the second year or amount outstanding at the time of third installment, it is 2194. So, we made the payment of third annual installment, that is 2412. So, if we deduct the amount outstanding at the time of third installment 2194 out of the annual installment, we can easily arrive at the amount of interest which is included in the annual installment. This is how the amount of interest which is included in annual installment can be calculated. When the asset is recorded at cash price actually paid. So, this is the second situation. The earlier situation was when the asset was recorded at full cash price. Now, here the asset is recorded at cash price actually paid. So, in this situation we know that in case of hire purchase, the ownership of goods passes to the hire purchaser after the last installment has been paid successfully. Since the goods do not become the property of the buyer, he does not have any right to debit the asset account at its full price. Hence, no entry is passed when the asset is purchased unless it involves down payment. Entries are passed as and when installment becomes due and the price of the product is paid. So, the entries are when the asset is purchased, we will make no entry because here the no payment is made. Therefore, when the asset is purchased, the hire purchaser has no right to debit the asset account, because until or unless he makes the last payment of the installment, he cannot debit the asset account, because debiting the asset accounts mean that the hire purchaser has become the owner of that assets. So, he cannot be an owner until or unless he makes the last payment to the hire vendor successfully. So, here for cash down payment, entry is very simple: asset account debit to bank. Second one is when the installments becomes due. So, it is very simple: asset account debit, interest account debit to hire vendor. So, asset account will be debited with the amount of cash price of the installment, and interest account will be debited with interest on installments, that is amount of interest on annual installment. Then the next journal entry would be when the installment is paid. It is very simple: vendor account debit to bank, because vendor is a person who is receiving the payment. Therefore, as per the rationale of the personal account, we will debit the individual who is receiving the payment. So, debit the receiver. So, here vendor account is debited because he is receiving the payment, and here as per the rationale of the real account. So, we will credit anything which is going out. So, here the payment from the bank is going out, therefore, we have credited the bank account. Fifth one is depreciation charges. So, entry is very simple: depreciation account debit to asset. Then The last one is when interest and depreciations are transferred to the profit and loss. So, just now we had discussed that being the losses and expenses, all expenses and losses balances have to be transferred to the profit and loss account. So, the journal entry would be profit and loss account debit to interest account to depreciation account. So, here one thing which is very important, the learner must always keep this thing in mind while dealing with the hire purchase transactions. It should be noted that though the asset account is debited with the amount of cash price paid. So, here it is clearly mentioned that not full cash price, we will debit the asset account with the cash price actually paid, not with the full cash price. The depreciation is charged on the full cash price. So, depreciation will always be charged on the full cash price. Now, the accounting treatments in the books of hire vendor. So, we have now discussed the accounting treatments in the books of hire purchaser. Now, we will discuss the accounting treatments in the books of hire vendor. So far as the vendor is concerned, a hire purchase sale is just like an ordinary sale, with the exception that payment is deferred over a period of time, for which the vendor charges interest. He debits the hire purchases account with full cash price and credit is given to sales account. So, the entry would be hire purchases account debit to sales. The interest amount is debited to the hire purchaser account as and when the installments becomes due. It is very simple. Installment amount received are credited to the hire purchaser account. So, entry would be cash account debit or bank account debit to hire purchaser and debited the bank account. So, on sale of goods under hire purchase, very simple, hire purchases account debit to sales account with full cash price. So, when we will receive the down payment, entry would be hire purchaser account debit to sales. So, here hire purchaser is the personal account. So, as per the rationale of the personal account, debit anyone who is receiving on receiving the cash down payment. On installment becomes due. So, when the installment becomes due, we will debit the hire purchaser account debit to sales. On getting the payment on due installment, hire purchaser account debit to sales. So, here on getting the payment on due installment, entry must be bank account debit to hire purchaser. Here entry must be bank account debit to hire purchasers, and here also bank account debit to hire purchaser. So, it is typographical mistake. So, kindly make it correction here. Here on receiving the amount, the entry would be bank account debit to hire purchaser. Here also bank account debit to hire purchasers. So, illustration is given. On 1st January 2017, IFB Limited acquired machine from JK Limited. So, here JK Limited is the vendor and IFB Limited is the hire purchaser for rupees 1886 cash price under hire purchase agreement, where rupees 400 was paid, 400 was paid as the initial payment. So, this is the cash down payment, and 2 installment of rupees 800 each would be paid. Interest at the rate of 6% per annum, and prepare ledger account in the books of JK Limited. It means we have to prepare the ledger account in the books of the hire vendor, assuming the rate of depreciation at the rate of 10% based on the straight line method. So, in the books of JK Limited, IFB Limited. So, IFB is the hire purchaser and JK Limited is the hire vendor. So, we have to prepare the ledger account in the books of hire vendor. So, it is very simple. Let us see how to prepare. So, the sales is made of rupees 1886 on 1st January. So, the entry was hire purchaser account debit to sales. So, IFB is the hire purchaser. So, in the books of JK Limited, we will make the entry IFB Limited account debit to sales. So, in IFB Limited to sales 1886. So, here by bank. So, here we made the entry bank account debit to IFB Limited for cash down payment 400. So, by bank 400. Then at the end of the year we made the payment of first installment. So, again by bank 800. So, here now the amount of interest is 89. So, we can easily calculate the amount of interest. So, this is the total amount of sales. So, out of this, we paid rupees 400 as cash down payment and 800 at the time of first installment. So, if we subtract 1200 out of 1886, so it is 686. So 686. So we can easily calculate the amount of interest. The rate of interest rate will be 6% per annum. So we can easily calculate the amount of interest. Later on we have calculated also. So now this is the bank balance by balance CD at the end of the first year, 775. This is the total of IFB Limited. Credit side 1975, debit side 1975. Now we will brought down this balance in the beginning of the next year. Two balance brought down. So again at the end of the second year we made the payment of second installment 800. So here 2 interest 25. So this is the balancing figure 800 800. So interest account in the first year it was 8900. So interest for us, interest is the income. So we will prepare, we will make the journal entry profit and loss account debit to interest, and here 89 rupees to profit and loss 89 rupees, and by IFB Limited, because at the end of the second year when the amount of interest become due, we made the entry hire purchaser account debit to interest. So hire purchaser account debit to interest. So in the interest account by hire purchaser. So IFB is the hire purchaser 89 to profit and loss 89. So second year again by IFB Limited 25 to profit and loss 25. So for us, you know, amount of interest is the income. So account of any incomes or gain is also transferred to the profit and loss account. Therefore profit and loss account is written here. Working note. Yes, here this is how we had calculated the amount of interest for the first year 89, amount of interest for the second year 25 rupees. So here cash price was 1886, cash price, this is the down payment 400. So balance is 1486. So add interest on in first installment to be paid on 31st December 2017 at the rate of 6%. So if we will calculate this amount, we will come to know that it comes to 89 rupees. Then the total is 1575. So less first installment becomes due at the end of the first year 800 rupees. So here in 800 the 89 rupees is the amount of interest and 711 is the principal amount. Then on 775 we can easily calculate the amount of interest on second installment at 6%. So it comes to rupees 25 because total is 800, amount of second installment is 800. So again in the second year annual installment rupees 25s are included as far as the interest is concerned, and rupees 775s are for the cash payment or for the principal amount. So this was all about this lecture on hire purchase accounts. So I am sure that this would have benefited, this would have made my learners very clear as far as the recording of transaction in case of hire purchase accounts are concerned. Thank you very much.